forfeiture of shares. So far, we have been assuming that the shareholders were cooperative and paid all their dues and all their costs when they are required to do so. But we have a situation where a shareholder can fail to pay the costs that are requested. So when a shareholder fails to pay for a certain call, then those shares will be forfeited. That is, any amount that he has already paid, it will be lost to that shareholders. We forfeit the shares. Then, between the time of call and the time of forfeiture, the amounts will be held like a debtor's account. We have to open an account, and we call it calls in arrears account. Then from where we transfer to forfeiture. So what happens? The due date for the call was 30th April. Then that person failed to pay for that call. First call. Mkaita second call in June. Akakuwa amefail. So ikabidi pesa zake zikuwe held as calls in arrears account. Then after wameona sasa mtu ameshinda kabisa kulipa, hata kulipa hizo pesa. Instead of staying with the calls in arrears, you transfer now it to the forfeiture account. How do you do that? So the journal entries forfeiture are as follows. Debit, the cost in arrears, and credit, the call not paid for. Call not paid for. That is for the amount owing. Sasa, what do you mean here? Si kulikuwa na ile first call, ama the call yenye haikulipwa. Yeah? So we are going to debit here. And credit. Inaeleweka? Yeah. Then secondly, you have to write the narration. This is to record the accrual of costs. Not paid for. We need the cost in arrears account. Then you have the forfeiture account. Then you have the first call. So this one, you have costs in arrears. And now you the same procedure. So the second thing that you do, you will debit forfeiture account. Debit forfeiture account and credit costs in arrears So this one, you credit costs in arrears account. How? Now the amount in the umepewa, you debit forfeiture account. The double entry yake inakuja hapa. Na kitu ieleweke. Isn't it? Then this one is to record forfeiture of shares. Then this one is to record forfeiture of shares. To record forfeiture of shares whose costs have remained in arrears. Whose costs have remained in arrears for a period exceeding the allowed limit. So we had said that all the shareholders should have paid first call by 31st May. Sindio? Na tukaongezea another 1 month. Huyu ama certain number hawakuweza kulipa. Sindio, tukaiweka hawakuweza kulipa hiyo first call. Sindio? And we had already recognized it here. So tukaitoa account ya first call. Tukai-recognize kama debt letters. Sindio? Then ikafika mahali tukaona watu hawatalipa kabisa. Iache kukaa. So we have to close this account by crediting that amount and transferring it to the forfeiture account. Then from there you debit ordinary share capital and credit forfeiture account. Sasa hapa tunafanya aje? So you have our ordinary share capital account here. Hapa. Okay? Remember, when the first call became due, tuliweka, unakumbuka kwa ile the previous illustration. So to transfer in amount here. See, ilikuwa hapo already. Now we want to remove it. Sindio? Because it has been forfeited. That is why we are debiting the ordinary share capital account. That means the amount that you had entered, that we were expecting for the first call, and we had already transferred it to the ordinary share capital account, now we are removing it from the ordinary share capital account. We put it what? Forfeiture account. This one is to record what? The cancellation. Record cancellation of the shares from the issued share capital. Note any balance In the forfeiture account, any balance in the forfeiture account is transferred to the share premium account. So if there is any balance, be tender upon. Is it clear? Illustration. Assume that 1,000. Assume that 1,000 shillings 100 shares. 1,000 shillings 100 shares were allotted to a member. Who paid shillings 75 on application, shillings 75 on application and allotment, but who failed the first and final call of shillings 25. Go ahead. How will such forfeiture be shown in the books of accounts? How will that forfeiture be shown in the books of accounts? So, the shares are payable on application, and allotment 75. See you? Okay? Then kuna first call 25. Yote inakupea nini? 100. Calls in arrears, and then the ordinary forfeiture. So how much was not paid? 25 times how many shares? So that one gives you what? That is now the amount. Remember, we are using the money measurement concept. Everything is measured in, can be quantified in monetary terms. So the amount that was not paid, it was how much? 2,500. The next step, hapa kuna journal. Sending journal entries. The entries are the ones that we are making. Okay? In the journal. Then, hapa kuna zile funds. Tumepewa tuianze na nini? Shillings. Not shillings. 1,000 shillings, 100 shares. Then you have application and allotment 75. Then first call 25. The total will be 100 shillings. So, debit cost in arrears, $2,500, and credit first and final call, $2,500. So in the ledgers, the cost in arrears account, then remember the cost in arrears account Then you debit. This one is to record accrual of course made but not paid for. Then the next step, these shares are forfeited. You debit, forfeiture. When the call became due, when the shares have been forfeited, you debit the forfeiture account and credit calls in arrears. So, forfeiture account and so this is to record what? Forfeiture of shares. Whose costs have remained in arrears. Then you have recorded that. What else do you need to record? Ordinary share capital. Already it has aggregation and allotment. It had this. But now, you have cancelled it. They have been forfeited. So they should not be here. So we need to cancel them from the ordinary share capital account. Understand what I'm saying? Fine. So to cancel them, you debit ordinary share capital account and credit forfeiture account. So tunazitoa hapa so that and credit forfeiture account. So hii account inafungwa, si ndio? Hii inafungwa, si imejikansel. The only account that will remain with the balance will be the ordinary share capital account, ambayo inaoneshana there are some shares which are not fully paid for. So we only have 75%. This one is to record cancellation of shares. So this will be our balance now. Such that if we are to make a statement of financial position, we will have in the capital and the part of equity and liabilities. This is statement of financial position, and you say it is an extract. We will have ordinary authorized share capital. It is 10,000, but issued 10,000 itakwenda issued and fully paid ni ngapi? And then you have debentures, you have others. What is the statement of financial position? Reissue of forfeited shares. Reissue of forfeited shares. If the forfeited shares are reissued, to another shareholders, the following entries will be made. The following entries are made. Debit, bank account, and credit, reissue of forfeited shares. This one is to record the amount paid for. The amount paid for the shares by the new shareholder. So pesa yenye ameleta ni receive. Okay? So you will have a bank account. You will open an issue account. So this is the issue. Bank. Okay? Then, the second step, you're going to debit the reissue of forfeited shares account and credit ordinary share capital account. This one is to record the issue of shares. So, the ordinary share capital account. This one, you debit the issue and credit ordinary share capital. Then the final step, you debit forfeiture account and the credit share premium. This one is to record, is to transfer the balance in the forfeiture account to the share premium, account. Here. So, our forfeiture account, when the shares were forfeited, it had an amount, isn't it? Yeah? Amount yake ilikuwa imetoka kwa calls in arrears, senior. So now here we do what? We debit share premium. And then you have the share premium account. This is forfeiture. Then you will find that this one is in a close. Now in a close. By trying to come to the statement of financial position, extract. In the part of assets, there will be bank. So you may remain a balance. Then, in the equity and liabilities, there will be the ordinary share capital, ndio iko na balance, and share premium. Illustration. So we are continuing the illustration that we had. Assume that the shares forfeited were issued at shillings 50. Show the required entries. Show the required entries.